My name is Sylvia. I'm 33 years old, and until 2 winters ago, I started every shift by straightening my name badge and stepping behind the coffee counter on the lobby level of a hotel on Bay Street. The hotel sat in the heart of Toronto's financial district. Every morning the lobby filled with people who wore good suits and moved like they were already running late. Lawyers, developers, investment bankers, senior analysts. They came for the coffee before the elevators swallowed them whole. I made lattes, poured drip coffee, remembered who took oat milk and who added 2 sugars. And I learned quickly that people in important positions still appreciate someone who remembers what they drink. I liked that job more than anyone in my family believed. The moment that changed everything happened at our Thanksgiving dinner. My father had chosen a restaurant near his office in Mississauga. The kind of place where the menu doesn't list prices and the lighting is too dim to read it anyway. He arrived already in the mood of a man who had just closed a deal, greeting the maître like an old acquaintance. Halfway through the meal, he stood and raised his glass. He said he wanted to propose a toast to his family. My mother smiled. My brother looked over at him with approval. I reached for my water glass. Then my father looked directly at me and said, loud enough that the table beside ours turned their heads, and to my daughter, who is out there every day proving that apparently a university degree is optional for a job at a hotel coffee counter. There was laughter. My uncle laughed. My mother pressed her lips together in what she probably thought passed for a disapproving look. My brother stared down at his plate. I smiled. I set my glass down. I thanked my father for including me in the toast. That night I drove home along the QEW in the dark and told myself that the only real answer to a moment like that is the kind that takes years to build quietly. What no one at that table knew was that every Tuesday and Thursday evening, after my hotel shift ended, I sat in a classroom in North York, working toward a postgraduate certificate in financial services. I was studying commercial credit analysis, loan structures, cash flow modeling, risk assessment, covenant design. I had already completed 2 of the 4 modules. I never mentioned it at family dinners, because some people form an opinion before you finish your sentence, and I had stopped trying to be heard before I had proof. My brother had joined my father's property development company right out of university and now managed project operations. My father introduced him by his title at every family event. My mother introduced me by saying I was still figuring things out. That was her kind way of saying she had already decided I hadn't figured anything out yet. They weren't unkind people. They believed that worth needed to be visible. Visible meant a title, a salary you could quote at the table, a business card worth keeping. I had a name badge and a foam milk technique I was genuinely proud of, and in their minds that didn't count. One regular customer at the hotel changed the direction of everything. He came in every weekday at 8:10 and ordered a black coffee. He always left exact change. One morning he noticed the textbook I kept open beside the espresso machine during slow periods. It was a chapter on covenant structures in commercial lending, and he asked what I was studying. I told him. He asked why. I told him that too. 6 weeks later, he arranged an introduction at one of the chartered banks on Wellington Street. I wore the only blazer I owned. I got the job as a commercial credit analyst. I did not tell my family. 11 months after my father made that Thanksgiving toast, his property development company submitted an application for an $11 million construction financing facility to the bank where I now worked. The file came to our commercial credit team on a Wednesday morning in November. It landed on my desk before my first coffee of the day, and for the first time in my life, my father had no idea who was about to examine everything he had built. 4 days after that file arrived, I saw my father without expecting to. My mother had organized a birthday dinner for herself at a steakhouse in Oakville, the kind of place where everyone arrives in something they had to press first. My father came in late, still answering messages, and spent most of the meal explaining why people who build things never really stop thinking about the build. Midway through dinner, he noticed I wasn't in a hotel uniform. I was wearing a charcoal blazer and a blouse I bought 2 months earlier. He tilted his head and said, "So you finally got yourself an office job?" Before I could answer, my mother smiled across the table and said, "She does something with paperwork at one of the banks downtown. At least she's not standing all day anymore." That was everything. Nobody asked what I actually did. My father nodded once, ordered another glass of red, and returned to describing the new mixed-use project his company had just broken ground on in Vaughan. I sat there and understood something I hadn't quite put into words before. My family had decided who I was a long time ago. Revising that decision would require admitting they'd been wrong, and most people will travel a long way to avoid that particular admission. Back at the bank, the review of my father's file began in earnest. Construction financing facilities of that size move slowly and deliberately. The application had been triggered by a refinancing deadline. The company's existing facility was expiring at the end of the fiscal quarter, and without a renewal, several active projects would lose their funding mid-construction. My role was to assess the company's financial health, verify the collateral, and model whether projected revenues supported the risk the bank was being asked to take. The numbers told a different story from the one I'd grown up hearing at dinner. Revenue projections looked reasonable on paper, but the underlying cash position had deteriorated badly over the previous 18 months. The Bank of Canada's rate increases had driven up borrowing costs on every project the company had financed since early 2022. Pre-sale targets on the Vaughan condo development had come in lower than projected. A commercial property in Brampton had taken 11 months longer to lease than the business plan had anticipated. Material and labor costs had climbed without the same corresponding increase in contract values. The company wasn't failing because there wasn't enough work. It was struggling because growth had been financed on the assumption that rates would stay low, and rates had not stayed low. As I worked through the financial statements, the corporate filings, and the project schedules, I started recognizing names. A site foreman I remembered from visits to construction sites when I was 12. The project accountant, who used to bring Tim Hortons boxes to meetings my father took me to as a teenager. The names of people who had worked for this company for 15, 20 years. People whose employment had nothing to do with the decisions made in the executive boardroom. I noticed that my hands had slowed down on the keyboard. The management presentation was scheduled for a Thursday. My father walked into the conference room exactly the way I expected him to. Confident, comfortable, greeting the senior relationship manager by his first name, before he'd even reached the table. He shook hands around the room without once glancing at the analysts seated along the far wall. 20 minutes into his presentation, my supervisor asked a question about the revenue assumptions underlying the Vaughan development. Then my supervisor turned toward me and said, "Could you walk us through the stress scenarios we modeled?" My father looked up from his presentation materials. It was the first time since that Thanksgiving dinner that he really looked at me. Not as his daughter who worked at a hotel, not as a source of mild family disappointment, as the analyst who was about to explain the numbers that would determine whether his company received its $11 million facility. I walked the room through the scenarios clearly and without looking away. The morning after that meeting, the bank's lobby opened at 8:30, as it always did, inboxes filled, and the work continued the way it does in financial institutions, regardless of what has happened in anyone's personal life. Banking does not pause for family revelations. My supervisor assigned me the next stage of the review, collateral verification. I needed to confirm the assets pledged against the facility, properties, equipment, partial interests in joint ventures, and validate whether their values still supported the lending structure. Over the following 2 weeks, I visited 3 of the company's active construction sites to verify conditions against the files. Workers recognized me at 2 of them. They didn't know I was there as the bank's analyst. They spoke the way people speak when they think they're only talking to someone's daughter. They mentioned that a key subcontractor on the Vaughan project was owed 60 days of invoices. They mentioned that a superintendent had quietly started looking elsewhere. They mentioned that the per-sale figures the company had quoted publicly hadn't included the adjusted carry costs after the rate increases. Everything they said matched the picture in the financials. My father had built the company on a model that worked well when borrowing was cheap and pre-sales were easy. That model had not been revised when conditions changed. The company hadn't taken on the wrong kind of work. It had taken on too much of it at the wrong cost of capital. That weekend, my mother invited me for dinner. My brother was there. Near the end of the meal, my brother asked carefully whether banks ever took family connections into account when making credit decisions. I explained that credit facilities of this size went through multiple layers of review. Credit risk officers, relationship managers, independent appraisers, legal teams. The analyst doesn't approve the facility, I said. The analyst evaluates the risk and makes a recommendation to a committee. My brother nodded slowly. It was not the answer he was hoping for. A few days later, my father asked me to have lunch. We went to a sandwich place near the bank, nothing special, the kind of place where you order at the counter and carry your own tray. He sat across from me and for the first time in my memory admitted, without drama or framing, that the business was in a difficult position. He didn't ask me to help him. He asked something smaller and harder than that. He said, "Do they think it's finished?" I told him the committee hadn't reached a decision yet. That was the honest answer. Over the following week, phone calls from extended family began arriving. Relatives I hadn't heard from in 8 months suddenly remembered my number. Some opened with questions about my health, and then within 2 minutes arrived at the same destination. Was there anything I could do? Did I have any influence over what the bank decided? None of them asked how I was finding the job. The hardest call came from my brother. He didn't try to apply pressure. He sounded genuinely tired. He told me that payroll had become a conversation that happened every 2 weeks instead of being automatic. 2 project managers had started quietly updating their resumes. A foreman who had been with the company for 22 years had pulled him aside and asked whether things were going to be all right. That foreman had taught me how to read a set of blueprints when I was 14. He'd brought his own kids to the same company barbecues I'd attended. His mortgage, his kids' hockey fees, his retirement, none of that had been caused by the decisions in the boardroom, but all of it would be affected by what the committee decided. For the first time since the file arrived, the reviews stopped feeling like a business matter. Inside the bank, the atmosphere stayed exactly what it always was: professional, evidence-based, impersonal by design. A senior credit risk officer reminded the team during one internal session that a chartered bank's obligation is to finance businesses that can recover, not to rescue decisions that should have been made differently. That sentence stayed with me the entire drive home. It was also exactly right. The evening before the credit committee meeting, my supervisor asked me to stay after the rest of the team had left. He placed 2 folders on the conference table. One contained my father's application. The other was a different property developer, a smaller company, fewer projects, much stronger liquidity ratios. He said, "Set the names aside, tell me which business the bank should finance." I spent 45 minutes going through both files. When I gave him my answer, I surprised even myself. The second company was safer on almost every metric. My father's company employed nearly 3.5 times as many people, had 2 decades of delivery history, and held contracts that would be difficult to replace in the current market. The risk was higher. The stakes of getting it wrong were higher too, in both directions. He nodded and said he wanted my written recommendation on his desk by 8 the next morning. On the drive home, I took a different route and ended up passing the hotel on Bay Street. The lobby lights were still on through the glass. I could see the coffee counter from the street. Everything exactly where it had always been. I thought about the Thanksgiving dinner and the drive home afterward, when I had told myself the only answer was the kind that takes years to build. I was sitting in the middle of that answer right now. The credit committee met the next morning at 9 o'clock sharp. 8 voting members sat around the long table, each with the same binder: financial statements, appraisal reports, legal opinions, project summaries, cash flow projections modeled under 3 different rate scenarios. Analysts sit along the wall. We answer questions, we don't vote. For nearly 2 hours the discussion moved back and forth. A member who covered real estate argued that the company's track record, its project pipeline, and its bonding capacity still represented substantial underlying value. Another pointed to the liquidity deterioration, the missed pre-sale targets, and 2 years of expansion without adjusting the capital structure. Every argument for approval came with an equally serious counter-argument for caution. Listening from my seat along the wall, I understood something I hadn't expected going in. There wasn't a clear right answer. There were only different ways of being wrong. Midway through the deliberation, the committee chair turned toward me. "You completed the operational review," she said. "Based on everything you've seen across the sites and the financials, do you believe this company can recover if the facility is renewed?" The room went quiet in the way it goes quiet when everyone is waiting to see what someone else will do. I knew exactly what they expected. Either I would understate the risks because the owner was my father, or I would overstate them to demonstrate I could stay objective. I gave them neither. "I believe this company can recover," I said, "but only if it operates differently than it has been operating." I told them the company had experienced people, deliverable projects, and client relationships that still held. The problem wasn't the work. The problem was that the business had been run on the assumption that growth covers everything, and that assumption had stopped being true when borrowing costs doubled. If the facility was renewed, strict conditions needed to attach: monthly reporting, independent financial oversight, capital expenditure approval thresholds, limits on new project commitments until the liquidity position was rebuilt. Without structural changes, $11 million would buy the company another 12 months and the same crisis. When I finished, nobody spoke for several seconds. The committee thanked me and continued deliberating in closed session. The analysts stepped out into the hallway. I stood by the window at the end of the corridor and watched a streetcar move up Bay Street below. I waited for just over an hour. Then the doors opened. The relationship manager walked out holding the signed decision folder. He found me before he found anyone else. He said quietly, "The facility is approved, but your father is not going to like the conditions." The approval didn't feel like a victory. It felt like the beginning of a harder conversation. The bank's conditions were detailed and firm. The $11 million facility would be released in tranches tied to project milestones. An independent construction monitor would review progress quarterly. No new project commitments above a set threshold without bank sign-off. Executive draws and bonuses were suspended until the liquidity ratio reached a specified target. Full financial reporting to the credit team every 30 days. My father called 2 days after receiving the conditions. We met at the same sandwich place near the bank. He looked like a man who had read the same document several times and hadn't decided yet how to feel about it. He slid the conditions letter across the table and said, "They don't trust me." I looked at it for a moment before answering. "They trust the company," I said. "They don't trust the way it's been run lately." He was quiet for a long time. Then he said something I had never heard him say in 33 years. He said, "I kept thinking the next project would give us enough room to fix what the last project had cost us." It wasn't an excuse. It was an admission. That's a different thing entirely. A week later, the company accepted every condition without negotiating a single line. Payroll was secured. Subcontractors received their outstanding payments. Construction resumed on the Vaughn project. The foreman who had been with the company for 22 years did not have to update his resume. Most of the people whose names I had recognized in those files would never know how close that had come to going differently. As I was leaving the office that Friday, my supervisor stopped beside my desk. He said I had handled the review with more integrity than he expected from anyone, regardless of experience. The praise was kind. What stayed with me longer was the understanding that the greatest thing I had done for my father wasn't finding a way around the consequences. It was making sure he finally had to sit with them. The months after the facility closed moved quietly. Turnarounds don't announce themselves. They happen in the small details. A subcontractor relationship repaired. An invoice cycle shortened. A project completing on the date the schedule had always said it would. The company wasn't thriving yet, but it was functioning, which was a different condition than it had been in the previous autumn. Outside the bank, something shifted in my family as well. Not dramatically, not in one conversation, but in the small adjustments that happen when the facts have been rearranged and everyone is still working out how to talk to each other. My brother called one Sunday morning, not about the loan, just to ask how I was doing. We talked for 40 minutes about nothing in particular, and it was the longest conversation we'd had in years. Several months later, I was at one of the company's active construction sites for a scheduled progress review with the bank's monitoring firm. A site foreman I had known since childhood walked over and started talking the way he always had. Easy, unhurried, like no particular amount of time had passed. He said, "Your father talks about you differently these days, you know." I looked at him. "He tells people his daughter works at the bank downtown," the foreman said. "Says she's the one person in any room who actually reads the numbers instead of just quoting them." He laughed and went back to what he was doing before I could respond. That sentence followed me for the rest of the day. My father had never called to say he was proud. He had not apologized for the Thanksgiving toast, not directly, not in any conversation we'd had since. But somewhere between that dinner and that construction site, he had started telling people a different story about me. One he hadn't told while I was in the room to hear it. A year after the facility closed, the company's annual review came through the bank. The numbers looked different. Revenue growth had slowed. But operating margins had improved. The Vaughn project had delivered on schedule. Pre-sales on a new development in Hamilton had exceeded the target. Debt was falling. The liquidity position had recovered past the threshold specified in the covenants. The independent monitor's summary described where the company stood in a single line: disciplined, stable, and positioned for the kind of growth that doesn't require borrowing against the next project to pay for the last one. The Toronto Region Board of Trade organized a panel event recognizing local businesses that had navigated the rate environment and restructured successfully. My father was invited to speak because his company's recovery had become a reference case in the commercial construction space. Our bank's commercial lending team attended as a sponsor. I sat near the back with every intention of leaving before the reception. During the question and answer portion, someone from the audience asked my father what the hardest part of the past 2 years had been. Everyone expected him to say interest rates, or the cost of materials, or the difficulty of renegotiating subcontractor terms in a cooling market. He paused long enough that the room noticed the pause. Then he said, "The hardest part was accepting that I had been confusing momentum with management for a very long time." A few people nodded, some wrote it down. Then he added, "And that the person I should have been listening to a great deal sooner was my own daughter." He didn't look toward me. The room was large enough that I'm not certain he knew exactly where I was sitting. He didn't have to look. He said it without being cornered, without being prompted, and without expecting anything back. That was the part that mattered. I stayed in my seat until most of the audience had drifted toward the reception area. Then I walked out through the lobby and stood outside in the October air for a moment before heading to the parking garage. There was no perfect reconciliation. My father and I didn't sit down and account for every moment we'd gotten wrong with each other over the years. Some conversations exist in theory more than they ever exist in a room. He is still the kind of man who arrives at dinner already thinking about the next meeting. I am still the person he introduced for years as figuring things out. But the company kept building. The bank reduced its monitoring requirements 12 months ahead of schedule because every covenant target was met on time. The facility was eventually refinanced under standard commercial terms, the same as any other healthy business file, without a single condition attached. I was promoted to senior commercial analyst the following spring. My work now involves helping business owners find the gap between what the numbers actually say and what the leadership team has decided the numbers say. It is, in many ways, the same thing I did every morning behind the hotel counter, reading what someone actually needs, rather than just what they ask for. One evening in early spring, nearly 3 years after that first file landed on my desk, I stopped at the hotel on Bay Street on the way home. The lobby was exactly the same. The coffee counter was exactly the same. The person behind it was maybe 22 years old and had a textbook open on the shelf beside the machine. I ordered a coffee and sat by the window for a few minutes before heading home. My father once thought that job was evidence of something gone wrong. I spent a long time half agreeing with him in the parts of myself I didn't say out loud. What I know now is that standing behind that counter in the heart of Toronto's financial district, serving coffee to people who ran things, taught me to observe without being observed. It taught me patience. It taught me to read a room before speaking in it. And it taught me that real authority rarely announces itself in a lobby. It just keeps showing up, quietly, every morning, until the work is done. The $11 million solved a financing problem. But the 2 years I spent straightening that name badge and remembering how everyone took their coffee, that solved something the money never could have reached. And in the end, that turned out to be the only part of my education that truly paid for itself.